Just a month ago, Meta announced plans to lay off another 10,000 employees. At the same time, Reality Labs, responsible for the metaverse, are losing around $4 billion each quarter. But these news don't necessarily have to be treated as bad news. They may be a reason to actually invest in this company. Sometimes radical changes may create great results. But to see if this is an interesting investment, we have to know, is it a bargain or is it expensive? Well, the price is still down by over 44% from its peak in September 2021, but it is also up by 130% from its low in November 2022. So let's analyze and value this company to find out where we stand. Is it a great investment opportunity that will change the world? Is it a company that made a bad decision and will suffer because of it? Or is it just too late to make this investment work? Let's start with recent results. Revenue is up by 2.6% year over year, but net income is down by an astonishing 23.5%. Now, that did not change in the last quarter, but cash and cash equivalents went down by 21.3%. Now, that is a lot. So, even though daily active users increased by 4% year over year, the earnings and the cash are getting smaller. So, who owns this company? Individual insiders, that is a check with 14% of the company owned by individual insiders. And actually, Mark Zuckerberg owns 13.5% of Meta, so he has a lot of skin in the game. And are individual insiders buying? That is an X. We see only sale transactions in the last year. And do super investors own this company? That is a check with 25 super investors. That makes Meta the fourth most owned company by super investors. And are they buying right now? That is an X. In the last 2 quarters, there are close to 3 times more sale transactions than buy transactions. So it does seem that super investors are not very optimistic about the future of Meta. Return on invested capital. That is a check at 19.3% 10-year median returns. And we want to see this number higher than 10%, so that is a very good long-term result. And free cash flow growth? That is also a check at an incredible 48.2% 10-year compound annual growth rate. We want to see this number higher than 10%, but this is almost 5 times that. So, very impressive. And what do we know about net profit margin? It is an X at 19.9%, and the industry average is 20.9%. So that is a bit low. And now let's take a look at share buyback. It is an X. In the last 10 years, they issued extra 3.1% of their shares. But Meta repurchased $9.2 billion of Class A stock in the first quarter of 2023. And it still has $41.7 billion available and authorized for repurchases. So probably it's going to be a check pretty soon. And the debt? It is a check. It would take Meta just over half a year to pay the long-term debt with the current free cash flow. So no problems here. To value Meta, we will have to estimate its growth for the next 10 years. And we will make 3 scenarios of this growth. So in the low scenario, we will estimate a growth of 10% for the first 5 years and then 5%. In the medium, 10% and then 15%. And in the high scenario, we are going to go with 15% for the first 5 years and then 20%. So basically, the low scenario predicts that the company will continue to slow down its growth. The medium one predicts that eventually, after a few years, it's going to accelerate. And the high scenario is predicting that the growth is going to start pretty soon. Now, when I look at those numbers, I think they are extremely high. But then, when I look at the last 10 years of Meta's growth, I see that the revenue grew by 36.8%, free cash flow growth was 48.2% annually, and earnings per share grew by 96.5%. So now, when I look at those estimates, they seem really, really low. But you know what? I prefer to be too conservative than too optimistic. But I don't know, maybe I'm wrong. Just tell me in the comments what you think. So with such estimates, we get $127 in the low scenario, $173 in the medium, and $250 in the high scenario. But of course, we have to add a margin of safety to those prices, because that gives us more room for error. I use a 30% margin of safety, and with such a margin, we get $89 in the low scenario, $121 in the medium, and $175 in the high scenario. And the current price is around $209. So only the high scenario without the margin of safety is in the green. But we should also remember that just half a year ago the price was at $90. So almost exactly where our low estimate with a margin of safety is. Of course, I can be wrong. I may be too cautious or too pessimistic about the future and the growth of Meta, but I still believe it is a great company. And I believe that the whole metaverse thing may work out, but it just seems a little bit too expensive for my liking. If you are into tech stocks, then click here to see my analysis of Google. Or if you prefer to concentrate on hardware, here is my analysis of Micro. Thanks for watching and see you in the next one.